Oh, let's focus on a CNBC-TV18 exclusive. Sources tell CNBC-TV18 that Mahindra Group is eyeing a sizable stake in RBL Bank. Nisha is here with the details. Nisha, over to you. What are you picking up?
Thanks for that, Prashant. Yes, at least two independent sources with direct knowledge of the development have really confirmed to CNBC-TV18 that Mahindra Group entity may have picked up around 4% stake in RBL Bank through open market trades in this particular month. Now, this is not just a financial investment, is what we gather from sources with direct knowledge. They share that Mahindra Group has ambition and aspiration of being a strategic investor in RBL Bank, which is, remember, troubled and has a sketchy last few years in terms of performance, stock price, as well as the top brass and leadership. So Mahindra Group is trying to also take advantage of this particular situation where RBI would want a long-term solution for this particular company and wants to raise and have a strategic stake of about 15 to 25%. But to the argument of RBI not giving a banking license to any corporate house or industrial house, on the other hand, up to 10% stake as per the present guidelines can be bought by a corporate entity with no promoter tag. So for Mahindra Group to really have a larger strategic play in RBL Bank as it aspires, according to our sources, it will require RBI's approval as well as some dispensation on the present rules. We did reach out to both the companies, Mahindra Group as well as RBL Bank, on these developments. The query, Mahindra Group has no comment. RBL has said they declined to comment. But we do gather from sources with direct knowledge that Mahindra Group is quite excited about the strategic synergistic benefits that this strategic investment can really bring to the table.
All right, Nisha, thank you very much. That's a very interesting story. Ashvin Parekh is now joining us. He's managing partner of Ashvin Parekh Advisory Services, someone who's seen these developments, the regulatory landscape very closely. Mr. Parekh, good afternoon. Good to have you with us here. Prashant this side. So the Mahindra Group, as Nisha tells us, is keen on raising stake to about between 15 and 25%. Now, up to 5%, there is no problem, right? Anything above 5%, you need the RBI approval. What do you make of this development? And do you think, given what we've seen in the past, this will have, this intent of the Mahindra Group will have the blessings of the RBI? In your assessment, sir?
Well, I mean, it's too early to say whether they already have the blessings or they will be seeking blessings, to get to that kind of equity. But one thing is, of course, certain that, corporate entities, particularly, the business house or the industrial house, as RBI sort of came out with different definitions over a period of time, will certainly require, because they have not been granted licenses, banking license so far. So one has to really see, in what context RBI will really examine this. If the investment was financial, however, as you say, the news suggests that they are of strategic nature. If it was financial nature, then of course it would have been a very different thing. But if it is of a strategic nature, then of course the regulator will certainly examine, what exactly is the group planning to do with that acquisition, with that equity. So I suppose we'll have to wait for the detail. We'll also have to see whether, there will be a regulatory approval later on. There will be need for one, certainty. That is beyond anyone's doubt. But at least my doubt. But I would certainly say that one has to really see what plans M&M Group has, with this acquisition.
Mr. Parekh, need is certainly there. Whether it will come or not is a different matter. But we've seen, right? Mutual funds, for example, when they cross the 5% seeking approval to go beyond that, there are entities where funds own up to 10%. There is an example of a Catholic Syrian bank, for example, where Fairfax owns 40% or so. But where do industrial houses really come? Just looking at how the RBI has looked at this. Conglomerates trying to get into banking. Go on, sir.
No, sure. So, you're right, absolutely, Prashant. See, I'll tell you, the regulator has been so far, not allowing any industrial house, any business house, to really acquire equity in the banking company beyond a certain threshold. and that too, sort of, with the approval. So to that extent, I mean, one has to really see whether sort of, they consider acquisition, accepting that an industrial or a business house can really acquire. Fairfax, I mean, as we speak, it was a different example altogether because, I mean, right from the very beginning, before even they acquired anything, so they did seek RBI permission, and it was granted. RBI considered, I mean, after taking into consideration several factors, including the fact that it was a troubled bank and it needed sort of certain order of capital and governance. So, I mean, those things sort of certainly the RBI will look at. RBL stands out to be a different case altogether. So let's wait and watch, I would say, in terms of what does the regulator.
But basically, Mr. Parekh, what you're saying is it's case by case. It's not. I mean, there's no. It's on a case by case basis, right? That's what you're saying. So it's possible.
That's it. See, I mean, this is true not only for sort of, the regulators in India. This is true for all financial sector regulators worldwide. The fit and proper test is a case-to-case kind of a thing. I mean, it is never like a regulation or, given that everybody, let's say, in a certain category or in a certain segment will therefore they be allowed on. I mean, even within financial conglomerates also, I mean, if you've done 10 years of financial services and then you want to apply for a bank, for instance, on a case-to-case basis, the RBI examines. It's never, I mean, a general kind of a regulation that applies specifically. So certainly it will be examined by the RBI, I mean, as an individual sort of, a transaction, and then they will really decide on it.
Got that, Mr. Parekh. Absolutely, that point is well taken. I think over the last several years we've seen every time there's been regulation around even new banking licenses, the RBI has taken a fairly vigilant stance with respect to business conglomerates getting into banking, meeting the fit and proper criteria, and also shareholding norms, been diluting shareholding over a period of time. So we'll have to wait and see how this plays out. But thank you very much. Appreciate your perspective on this. In the meantime,